Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day. It is July 18th. Today we're going to take a look at a company out of the industrial sector, Lockheed Martin. Let's jump right in. So Lockheed Martin, if you want to know more about them, check them out, www.lockheedmartin.com. That is their homepage where I pulled this information from. They are a behemoth in the defense industry, industrial space, but really focused around the defense industry. Over 100 years ago, on August 16, 1912, Glenn L. Martin established the Glenn L. Martin Company in Los Angeles, California. He started the company after building his first plane in a rented church, where he took a leap of faith on his risky business but innovative new aircraft design at the urging of none other than Orville Wright. 4 months later, and 400 miles away, on December 19, 1912, Allen and Macomb Lockheed founded an Alco Hydro Aeroplane Company, later renamed the Lockheed Aircraft Company. Talented mechanics, they set up shop out of a garage constructing seaplanes that would shatter speed and distance records for overwater flights. Planes aren't flying underwater, obviously. A church and garage, these were humble beginnings, but these were also men of unrelenting vision and unwavering purpose. The gift that Martin and the Lockheed brothers shared was a unique ability to look past the obstacles of the day to the promise of a brighter tomorrow, and they knew, as we've known for 100 years, that innovation, performance, and purpose were the keys to accelerating that tomorrow. So from humble beginnings over 100 years ago at this point, two people got together and created the Lockheed Martin Company. Again, very focused today on the defense industry, and that is where they've come from. If you really want to check them out, again, it is a pretty cool clip here that you can get on their homepage and check out. There's some good information there, a little more detail, and it goes through, the years. This was obviously the early years, but it goes through decade by decade how they've grown over time. But again, what you really need to focus on, they're a behemoth. They are paid by the American government. So as long as the American government, and we have a defense industry, right? We have the military, a company like Lockheed Martin, General Dynamics, several others. That's their bread and butter, and they're going to continue to be in business making, machines of war, basically planes, boats, ships, bombs, you name it. Unfortunately, for those of you who may not have been in the military, I was in the military. That is the nature of a large portion of our government spending, defense spending, and it goes to companies like Lockheed Martin. Now on to a little bit more useful information. The reason we are looking at them, down 3.05% on the day. We are talking about Lockheed Martin Corporation, ticker LMT. Lockheed Martin Corporation, ticker LMT, closed out the day at $455.65. 52-week range as low as $373.67, as high as $508.10. They're slightly more leaning more towards the 52-week high here at $455.65. Would love them to pull back here to this 52-week low, but a big drop would have to ensue, much more than 3%, a little over 3% we saw today. Average volume 963.768 million. Today's was 2.9 billion, and a big sell-off from start to finish here. Pretty much looks like leveled out a little bit, maybe recouped a little in the afternoon there, but pretty much down from start to finish. Market cap of 115.395 billion. A beta of 0.65. So beta is the volatility of the market, if you didn't know. A 1 being the market. Anything under 1 is less volatile. So Lockheed Martin is less volatile than the overall market. Anything above 1 would be more volatile. Price to earnings PE ratio of 20.89. This is elevated for this company. I would love this back in the teens, 13, 14. A company this size, really built out, should be in the teens for a price to earnings ratio. $20.89 per share currently. That is high. The EPS, though, is very high on this one. Earnings per share is $21.81 per share. That is a very nice earnings per share here. Earnings date, the next one coming up, July 18th. So look for that. Actually, that was today. So that may be part of the reason for the drop. You'd have to look at their earnings, see what they spit out there. May have had some negative earnings. That might be part of the reason for the drop here. I did not look at that before I put this video out. For dividend, $12 on the year. They are quarterly payers, so divide by 4. Basically it's going to be 3 cents per share per quarter. We'll see that here in a little bit. And a dividend yield, nice dividend yield of 2.55%. We'll see if that's growing here in a little bit as well. Ex-dividend date was August 31st. They really coming up, August 31st, 2023. I thought they would have had one sooner than that. Looks like they're going to pay out on September 22nd. So if you were to buy them now, you would be in line for this next dividend payout. And a 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated, just one of the sources I like, $508.79 per share. So it does speak to some upside appreciation potential in the stock price. Let's look at dividend yield theory. To do that, we'll go under statistics here, look at dividends and split down toward the bottom, look at their 5-year dividend average, 2.6, compare it to their current 2.55. It is currently lower than their 5-year average, so that speaks to some overvaluation according to dividend yield theory. So this one is slightly overvalued. It does have a payout ratio, 53.14%, so that is low. I like anything under 75%, so in my wheelhouse here. Free cash flow is another one we want to look at. Under financials, you'll find their income statement, their balance sheet, revenue, how much debt they have. That's a lot of good information, useful information you want to take a look at. But for us, we're going to take a look at free cash flow because dividends are paid out of free cash flow, and we want growing free cash flow over time, so we have growing dividends over time. 2019, we were at 5.8 billion. 2020 up to 6.4. 2021 up to 7.6. So nice growth from 2019 to 2021. A bit of a drop off from 2021 to 2022, down from 7.6 to 6.1 billion. So you'd want to wait and see what they report out here. When was it? July 18th today. You'd want to look at their earnings report today. See if that drop is continuing here or if it is going back up. With things starting to level out in Ukraine, there may be a little bit of a drop off. Obviously, whenever at wartime, companies like this do very, very well. And I always recommend more than one source. So this is all from Yahoo Finance. Oh, one more. We'll check out repurchase of stock. They are buying back their own shares of stock. You can see that here clearly over time, buying back shares. So that is nice to see. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. Again, I'm not affiliated, just one of the sources, and always recommend more than one, at least two, if not three sources, so that you can back check the information that you're getting is accurate. You pick the sources that you like. You don't have to use Yahoo Finance. You don't have to use stockanalysis.com. Some people like Seeking Alpha. Some people like Microsoft. Some people like other sources that are out there. These are just the two that I like. Now, according to the 14 stock analysts they've had to take a look at this, they call it a consensus hold. I would agree here. This is a little rich for my blood. I would love it back down in the 300 range. I think under 400 would be fairly valued for this one here. It doesn't have to go all the way back to the 373, but at current value, I believe it is overpriced. Even though dividend yield theory says it's slightly overpriced, I believe it's considerably overpriced here at this elevated price, in my opinion. Now, they have a low estimate of $332, which would speak to some downside here on this one, 27.14% decrease in stock price from where it currently sits. I'd love it back there at 332, which would be a new 52-week low, according to the slide we saw previously. Average estimate of $480.93. That would be a 5.55% increase from where it currently sits. And if it happened to hit their high of $579, that would be a 27.07% increase in price. Now, this gives you, from stock analysis, gives you a lot of the same information. Financial statistics is what we're going to look at next. Under statistics, I like to look at ROE and ROIC, and ROE stands for return on equity. I like 10% or better for both of these, and this really smokes both of them. Return on equity, 53.80%. Very, very high return on equity. Very nice here. Return on invested capital, ROIC, 21.20. Same thing. I like 10% or better. So both of these really knocks it out of the park on this one. All total, when I look at the breakdown here of Lockheed Martin, the only thing that I really don't like, even the little drop in free cash flow, does not really bother me that much. It's not that big of a drop from where it was in 2021, 2022 even. So not a big drop off there, or 2020, I mean, not a big drop off in free cash flow, but the elevated stock price is the one that I really get hung up on. It just is overvalued in my opinion. Like I said, back under 400 would be a decent buy-in, or at least in my opinion. And let's look at dividends here. Again, low payout ratio, 54.97. Anything under 75%, in my opinion, is nice. So this one definitely meets that criteria. Dividend growth is 7.14. So they are growing the dividend nicely. I went back to 2020. It was August 31st, 2020, $2.40. They raised it up November to $2.60. Rode $2.60 till November of the next year when they raised it to $2.80 in 2021. Looks like November is kind of the month that they raised this up. They raised it again in 2022, up from $2.80 to $3, and they've held that $3 ever since. So I would look for another raise in November. It looks like that's kind of their timeline. Here is the vested interest stock screener. If you're interested, go ahead and pause this. This is how I lay out the videos. This is also how I look at companies to see if I'm interested in adding them to my position, or if they are in my position, interested in keeping them in my position or adding them. Just because they don't meet all of the criteria doesn't necessarily mean anything. It must meet 4 of 7 to be investable if it's not already in my portfolio, and probably to add to as well. Or if it's a financial company, must meet 5 of 8. I add on this last one, price to book, around 1 or lower for financial companies. But you can pause this and go through the rest of that criteria. And that is really it for this one. Let me know what you think of Lockheed Martin. Again, there are other companies like it. General Dynamics, Northrop Grumman are a couple that come to mind. If you like those better, let me know. What do you think of the... some people don't like this sector altogether, not industrials per se, but the defense sector. Some people avoid it because their morality or something. Same thing with some sin stocks. Some people don't like stocks that deal with alcohol or smoking, that sort of thing. I tend to shy away from those that deal with smoking, so I completely understand that if this is not in your wheelhouse. Let me know what you think about Lockheed Martin down in the comment section. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. We're building a community of like-minded dividend growth investors so we can share stocks like this that we're watching, that we're buying, our experiences as dividend growth investors, so that you can learn something from somebody else and hopefully not make the same mistakes that others have made along the way. That is the idea behind this channel. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like Lockheed Martin that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount uncomfortable losing. Always do your own research, especially in your situation, circumstances, on select criteria, or seek legal advice counsel with a certified financial advisor.